Alrighty, good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments of July 20th, 2023. Gonna get right into it this morning. Hopefully you can hear me loud and clear. Give me a hello, a yes, a nice to be here. Whatever you think you can put in there, just let me know. That way I'm sure I'm being heard. So what are we going to talk about today? Well, I know some of you were expecting Kevin this morning, which, well, until yesterday I was expecting that as well, but he asked me to take over this one as well, and Kevin looks to be taking over both webinars for next week. Just kind of our usual summer, hey, can you take it? No, but can you take it? And back and forth, and that's part of how we help each other out and make Hurley Investments work for both of us, and for the most part, it all works fantastically well. So it's good to be with you this morning. Going back to the 13th was our last trade findings and adjustments. We talked about the following below. As you guys know, I usually keep things up and just kind of give you a brief overview of what things we discuss so we can kind of jump off of that. We talked about why the market is going up and emphasized how things that the market believes is happening or is going to happen dictates what the market is doing right now, what its trend is doing. And based off of the trend, we can understand good idea of what the market believes about our current economic situation, our current stock market situation, all of the above, as we compare it to real numbers, real data. We can get an idea for where the market is just assuming some things and where the market is where there might be some overvaluing or undervaluing of assets, of stock prices, of the economy in general, those kinds of things. So an emphasis on believes. We'll come back to that because I kind of want to jump off from there. We talked about Meta continuing to take off. Just look at a Meta chart, not Met, but Meta. A little pullback today coming off of overbought, but as you can see, lots of those days throughout this incredible 6-month run in Meta. And pullback today suggests to me that investors are kind of weighing up how the next earnings report is going to go. I believe theirs is on, I think it's on the 26th. Let me double check in my calendar. No. Bear with me, guys. Yes, it is July 26th, Wednesday. Wednesday next week. So we do have protection on our shares of Meta. So is it going to go up? Is it going to go down? If they've continued to fulfill what they've been able to fulfill their last several earnings reports, you can see these big gaps. That was their earnings report, this big gap on their earnings report. Any of that kind of reaction is going to be because Meta is continuing to fulfill promises. And a lot of the last several weeks of upward movement you can blame on their rollout of their new Threads platform, which is basically a blatant ripoff competitor to Twitter. They're seeing some weakness there that they can try and take advantage of, and frankly, I've last heard 100 million users already jumped on it. So that is all for good reason that stock market, or at least the stock, has continued to make a run. And that's one, if you're going to take a somewhat of a risk in your portfolio in the form of a leap call, yes, it's gone up so much, but it still has room to run for getting back to all-time highs at 330 or whatever it was. No, it was closer to 350. I'd have to double check here. I don't want to be wrong. Don't want to be wrong. Okay, so it's 384. It's a 5-year high. So another 70 something dollars of gain in there just to the next high. Excuse me, their high, all-time high. But even at that price, they're still at an undervalued situation. They could get up even higher, up to above 400. So if you're looking at something, I know we don't talk about, this is called trade findings and adjustments, but usually we're not just giving, do this trade, do this trade. We're not a newsletter or an education that just tells you what to do. We tell you what we've been doing and tell you, talk to you about some trends that are happening, especially in the stocks that we follow. And you, using your brains, can make your best educated decisions as to whether you feel like it would be a good idea to place a trade for yourself. If I had a portfolio that still doesn't have Meta in it at all, it's an expensive stock at this point. January this year, I would have said, what are you doing? Go buy it. Buy hundreds of shares of Meta at this point. It's not a terrible idea to be buying shares, but it's quite a bit higher at this point, and quite a bit more expensive as a portfolio amount of cash to be able to employ for this stock. So my thought would be, hey, look at some leap calls, maybe a January 2025 320 or higher. You're going to be paying around, I would guess, around a couple thousand for one contract. So with a portfolio that has I don't know, 20, 30,000 at least, buying a contract there and having plenty of cash on the side, that's not the worst idea I can think of. It's something to consider. Disney, I hope all of you guys and ladies were here last time, but especially Monday, I went into detail more about Disney and some of the criticisms that are driving the price down. Popping up for a couple days here, but hitting 90 and just diving down. We've had 90 strike puts on for several weeks now, and we'll probably look to book a profit on those as we're running out of time to hold them, and we'll need longer term ones, or at least to roll them out for more time before earnings. Earnings on Disney. Where are earnings on Disney? I have August 9th is what I have. So you're going to be looking to probably roll those 90 puts down and out. Maybe book a slight profit. I'm not sure where our cost basis is there at the moment. But we talked about Disney in detail last Monday and how the belief, going back again to belief, market believes that Disney is bleeding money, bleeding cash. Nowhere can I find in their actual earnings report numbers, or really anywhere reliable, to suggest that they're bleeding cash. What they've said, and this is just a synopsis of what I talked about Monday, for a couple of years ago when they started to roll out at the beginning of rolling out Disney Plus, they said they would probably be profitable in they're shooting to be profitable on Disney Plus in 2024. Market during the pandemic, all they cared about was subscribers, and Disney had an amazing run of gaining subscribers, and over that closed down to 2020 period, and that seemed to be all that the market really cared about until, hey, costs are starting to come in for this program, for this part of their company, the Disney Plus streaming, and all of a sudden people are saying, well, they're losing money. When what they've said from the beginning is, yeah, this is going to cost money, obviously, production costs for the shows and new shows to keep people interested and engaged, and all the costs that go along with setting something up like this. And again, they've said from the beginning, gonna cost money, and every time they've come out with a earnings report and they've talked about what they've spent on it, everybody freaks out. And the reality is this is nothing new. It's just that the market focused on something else, i.e. only subscribers. And so what do you guys think is going to happen once this starts to get paid off? They start to become profitable next year. A lot of assumptions and beliefs on Disney are going to start to turn the other way. The other criticism was their parks aren't getting traffic. That was complete nonsense. It is true that Walt Disney World was having less traffic. That's coming off of a huge comeback after the pandemic when everything was closed. And the same thing is happening to Universal Studios Orlando. So it seems to be a Florida thing. Maybe the locals are off doing different things, doing different trips, and basically Walt Disney World has come back to 2018, 2019 levels of park attendance. So kind of back to parity, if you want to use that phrase. All right, I've already spent a little too much time on that for Disney, but some ideas and thoughts for you, and a little bit of a recap. But again, goes back to my point that something that the market perceives or believes either creates a bubble or it creates undervalued assets. Sometimes things are fairly valued, but I can tell you right now, Disney is not being fairly valued. They're not getting the credit they deserve. Their Disneyland park especially is still ridiculously busy. Movies are still making money, although we wish we would see them make a lot more. Their earning report last time suggested over the last year they've made over $1 billion in their media segment, which includes more than just movies. So maybe there's something in there, but they don't give us those details on tickets, sales, and all that. We kind of have to guess. But the market decides what it believes, and I'd like to suggest we look at things a little different. What kind of things does the market believe will happen or has happened? I keep using that word believe because that's what I was talking about last time. This really is how do I want to say this? A better way to say this is market perception. In the case of Disney, as we just talked about, it perceives that it's losing money because of the costs that they've incurred to build their platform on Disney Plus. Why doesn't it perceive that this was already part of the plan? Well, because the market really only looks at the big headlines and nobody does their actual due diligence, at least not most. We read these articles that say one thing and we just assume these articles that make a certain claim. Oh my goodness. and we assume it's all correct. If you went back to my webinar on Monday, I showed you an article that made those claims that parks were darn near empty, and it had links. In fact, I'll show you again. Foot traffic declined for months, non-existent lines. You click on those, and it's just this stupid article on insidethemagic.net that had one picture that kind of looked like a unimportant area of Disney World where there were only a few people walking through, and that was their proof. There's no actual links, no data. It's garbage. But you see that there's links there, people just read it. Okay, there's obviously they did their due diligence, right? Wrong. We have to do our own due diligence to see and gauge what I'll say Mr. Market's perception lies. I'll say where. Thanks for the suggestion, Microsoft Word. think I'll keep have to. So we have to do our own due diligence. We have to crunch our own numbers and look at the actual available data to decide if Mr. Market's perception is accurate. When we can do this, we'll find where the value is, whether something is overvalued, whether it's undervalued. So those are some tips on what's going on, or more rather, how to look at things, how to gauge what's happening in the market. Obviously, you've heard me talk about tracking economic numbers, tracking news. Tracking the economic numbers shows us that we're really following what's actually happening instead of following rhetoric. So we come here and we check that. We know that retail sales are down, should have been 0.6, only in at 0.2. So suggesting that buying is slowing down. We've got employment numbers coming in at the end of the week. That's today. Forecast, initial claims, so not as high as it's supposed to be. So we go through and we look at these things, we see how the market reacts. Kind of a lower weekly thing, but down a bit today. I'm sure the market would have loved to see that a little higher, where a little more jobless claims shows us that the economy is slowing down, not so hot. But we just go through these types of things. We check our news, we check on what's happening, we verify, and somewhere through all of that, we come at a good understanding of what's going on and what we need to do. We've obviously got our earnings season starting to come into full swing here. We've got some mixed earnings, similar to how we had started out last time. We've got FOMC rate decision next week, I think on the 26th. Let me just double check. Go back to next week, 26th, rate decision. Perception, what the market believes, as I talked about last time, is that market still understands that there's going to be some rate hikes, but that's going to round up the rest of the year and not continue into next year. That's what everybody believes. Earnings of note, JP Morgan did fantastic. They're on a tear. One to keep in mind, we are overbought, but obviously right now there's a reason for that. It's been a long time since it's been overbought. It's a big jump from last earnings. And finally some follow through and some carry on after the recent earnings last week, I believe. Can't remember the day, but that's one to follow in terms of current direction that you might look at. 160 bull call, leap out to 2025, something of that nature. Bank of America, we had, what was that, Friday? What was that? That was Tuesday. Nice run up from Tuesday, hitting this 200-day moving average, trying to fight it, getting up to that overbought. We're waiting to see if this can hold on and start to break through, as they had a good earnings report as well. Banks did, at least our banks did well. And I would be waiting to see if that makes a strong breakthrough over the next couple days before following a trend higher, because it seems like awful lot of time Bank of America will have a good earnings and it'll pop up and then it'll just kind of peter out and fall back down, as you can kind of see. Big run up, nearly hits the 200-day and just kind of peters out. Name of the game so far for Bank of America. So we'll keep an eye on that one, see what we need to do. All right, guys, that pretty much does it for me. I hope that talk through on how we look at what the market is perceiving, what it's assuming, what it believes is going to happen, so that we can both be prepared on when, or at least when it's surprised, we can understand why. We can understand where it has overlooked value or overestimated value. And that is the main name of the game. Any questions before I wrap it up? All right, guys. Not seeing any questions come through. Quiet day, but thanks for joining me. Again, Kevin will be back next week and he'll be doing both webinars. So look forward to hearing what he has to say. And hope you guys have a good weekend. Hope you're having a good summer. And we'll see you next time. Take care.